Good afternoon, everybody. Thank you to Yesh for inviting me to Hong Kong, especially because I used to live here back in the 1980s. I'm that old. I was serving here as an officer in the Royal Navy, and I was second in command of a patrol boat where we spent most of our time chasing smugglers and not really catching them very often. There was some innovation, actually. If we got some Royal Marines in a fast patrol boat with two big engines on the back that went about 60 knots. So the smugglers innovated and they got offshore power boats. So we got a helicopter, but we still couldn't catch them. So I'm Tim Lafferty, and I'm COO of Mawsonia. We're a little publishing company that cover three areas of venture capital, which are corporate, government, and university venturing. We started about 5 years ago. I worked for Dow Jones with my colleague James Mawson, and he was an editor and I was the head of sales and marketing for Europe for Dow Jones. And he identified that there wasn't a trade publication for corporate venturing, even though it was a growing area. There weren't really global events, there wasn't much data, there wasn't much sharing of best practice. So he started to write about it, and we had our first conference 5 years ago. So it was 5 years old this year, and we have like 400 people come to London, the top sort of people in corporate venturing, and Al Gore's spoken at it. So it's kind of taken off a bit. So we've almost become a bit more of an event company than a media company. 3 years ago, we launched Global University Venturing, which looks at how universities invest in spin-out companies. And then government venturing is how governments are increasingly creating funds to invest in startups. So that's a little story about how our company came about. So I'm going to briefly talk about those three areas of venture capital. So corporate venturing has taken a bit of a leap in the last year and a half or so. You can see the number of deals in 2014 was about 1,400, and it's going to surpass that in 2015 by the end of the year. In terms of dollars, it's already well ahead of last year, $64 billion. And part of the reason for that big jump actually is the transport sector. So Uber is in that sector, and the China equivalent of Didi Chuxing have raised quite a lot of money this year. So it's definitely a boom time for corporate venturing, which has kind of filled the gap a little bit for traditional VCs that some of them have fallen by the wayside after 2008. If you look at it geographically for corporate venturing, you can see the US is still a sort of 300-pound gorilla with 1,000 deals in the last 12 months. China's about a fifth of the size of that, but growing quite quickly, and it's sort of second biggest market. One of the things I think quite interesting about this chart is if you look at the US pie chart there, the red sector is IT, so that's the biggest sector, and then the second biggest is the green one, which is health. If you look at the China pie, the light blue sector is the biggest, and that's consumer, which kind of ties in with what Moose was talking about a little bit in terms of buying your snacks and so on. That would fall into consumer sector. IT is the second biggest, and then health actually is one of the smaller ones at the moment. These charts, by the way, quick plug to our just because we've just launched it, it's a new data analytics product called GCV Analytics. So we've tracked 5,000 corporate venturing deals over 5 years, and we've now got this tool where you can cut and dice the data in different ways and create pretty graphics. So if anyone wants a demo later, I'll be happy to show you. It might come in handy in tomorrow's sort of research discussion. Just to talk about, because the title of our panel was sort of models of venturing and LPs, just to touch briefly, I won't sort of go through this in too much detail, but how corporate venturing is sort of structured. There's sort of a continuum. At one end, you've got purely financial goals, and the other end, purely strategic goals. And most corporate venturers have some form of strategic goals, by which I mean they're looking at, they recognize that they're not very good at innovating generally, and that they need to work with entrepreneurs, and they need to understand where technology is going, because it might take them in new directions and help them to prosper. Or if they don't keep an eye on it, these new technologies might come and eat their lunch. So a little while ago, the hotel groups, Hilton and Intercontinental, they thought their competition was each other. and they were completely blindsided by Airbnb. So funnily enough, they've started doing corporate venturing now. And nobody wants to be the next Kodak or the next Blockbuster, right? So, so there are some corporate venture capital groups that only have financial goals, but you could argue, well, are they really corporate venturing organizations? You know, that if all they're doing is looking to make a financial return, then they're the same as a VC, really. So most have a mixture of financial and strategic goals. And Qualcomm, I quite like the way they describe it. They say that the priority for us is strategic, but we don't want to be a cost center either. So, because if you're a cost center, as soon as there's a bit of a downturn, you know, you're likely to disappear. And something else we're seeing more and more of now is multi-corporate funds, where you have a GP managing a fund, and then corporates are LPs. They're the limited partners in the funds. Asta and Iris are two examples. So France actually has quite a lot of that going on at the moment. So some corporates are actually doing investments from their balance sheet, and that can be quite good in that you get buy-in from the top. Others are sort of separate funds, and they can be a bit more nimble because they're a bit more independent, but they don't want to get too far away from the mothership. Otherwise, you know, one of the benefits of taking corporate money is that corporate hopefully can help a startup channel into its various resources, whether that's you know, marketing resources or R&D, globally help them scale up. So they need to be close enough to be able to make the introductions to the business units. And then something else we see a bit of, particularly common in sort of new corporates new to venturing, is they might start off investing in VC funds as a way of kind of getting to understand venture capital. One thing that we're seeing the rise of, and we might want to talk about on the panel if people are interested, is the rise of the corporate accelerator. There's several hundred now corporate accelerators, or either run by corporates or backed by corporates. So, you know, there's probably discussion to be had. Are corporates the right people to be running accelerators? What's working and what's not? So university venturing, I don't know if you can see this very well, it's a bit faint. But just to give you a kind of idea of the scale of it, last year there were over 500 deals, totaling about $8.5 billion globally. Most of the activity is in the US, and the UK is not far behind. The health sector is the biggest, and the reason for that is that, you know, health, particularly sort of drug development things, really struggle to get shorter term venture money. So VC funds, typically 5-10 years, they're not interested in something that's going to take 20 years of development. So universities can step in and support that. The reason that universities do venturing is, you know, they want to be able to support their faculty and their students. It's good PR for them, and also they can make a financial return. So one example, there's a spin out from Dresden called Novaled, which initially got corporate venture financing from Samsung, and was then bought last year by Samsung for $345 million or something like that. So good return. No university wants to miss out on the next Google or Facebook if they can avoid it and make some sort of return. I won't go too much into these sort of different models, but some of them run their own funds, some of them outsource it. So Imperial in London is quite a good, you know, successful one, and their venture fund, Imperial Innovations, actually is quite separate now from the university, and it's actually a listed company on the AIM stock market. And Imperial, the university itself, only owns about 20%. Probably can't read this very well, but you will get the slides afterwards if you want the detail. But this is a list. We attempt to sort of rank who the most successful corporate venturing units are, and if you can read it, you'll see that they're all in North America or the UK. There's a bit of blurb at the bottom which kind of includes a disclaimer that there may be data that's hard to come by from other universities, particularly you know, China, for example. Tsinghua would probably be on this list if we could get the data. There's probably some Israeli universities that are not far off being on this list as well. Government venturing was covered really well by Robin earlier. Something that we look at. Governments basically recognise that to grow an economy, you have to support startups to go from being a small company to being a large company. You don't grow an economy by having a large company becoming a slightly larger company in general. So there's a lot of activity going on around the world. Some examples, Robin gave some good examples. In Germany, the largest VC is High-Tech Gründerfund, which is a state fund which has about 20 corporates as LPs. Singapore's doing a lot. We had a conference in Brazil 2 weeks ago. The Brazilian government, or part of it, called Apex, invited us to collaborate with them. They commissioned us to bring in 20 corporate venturers because they really want to attract inward investment and get those large corporates investing and doing their R&D in Brazil. The Eindhoven government did the same with us in February. We did a conference there. They wanted to raise the profile of a tech cluster, rather similar actually to Cyberport, but it's called Brainport. So again, we brought in international speakers. So there's a lot that governments are doing. And beyond what Robin was talking about in terms of specific stuff to do with venture and innovation that governments could do, I would say they also probably need to think about the larger environment, which is much harder thing to fix. But if you're trying to attract companies to come and locate and put their people in your country, it has to be a safe place for them to live. Brazil's got a lot going for it, but half the Intel Capital people that have worked there in the last 10 years have been mugged at knife or gunpoint. So, that sort of thing needs to be addressed. No, not good for venture. Neither is a lot of pollution, which obviously is a problem in Asia at the moment. People are trying to move. They're wanting to move out of Beijing and other cities as well if they've got children. Corruption is an issue as well. If you open a unit there, you're going to trust that it's not going to get screwed over by corruption. So there are some sort of broader things, I say, harder to fix, but also important to encourage companies to come and locate in your country. So in terms of, I've got one more slide. Yeah, just another thing, because we're talking about future and sort of trends, things that are happening. One of the things we're seeing is a little bit more of companies and organizations setting, environmental or social impact goals as part of their investment strategy. And I've listed there 3 examples of funds that have been created that make the world a better place. And Professor Fung, is Professor Fung here? Is Walter here? Where is he? He was here earlier. He was telling me at lunchtime that he's doing a seminar on orange technology, which is, that
actually belong to my department in the Hong Kong Poly. That would be very interesting.
Yeah, this is orange technology, which I had not heard of, I have to confess, but it's to do with happiness, creating happiness. So perhaps that's another thing where corporates can look at...
basically follow sort of the green set of technologies, but actually adding a measurement for human happiness as a key for the technology. That's sort of the idea behind orange technology.
Interesting thing to try and measure, but yeah.
So if it's medical, it's like that, right? It's like a shot.
Since I'm going to be the keynote speaker there, I better know what I'm doing. So I need ideas.
I'll be interested to know what comes out of that seminar. So in terms of things that are going to happen, who knows? But I think we'll see more corporates collaborating with each other. I mentioned the multi-corporate funds, but in France, for example, Eco-Mobility Ventures is a collaboration between a train company, originally it was a car company, an energy company, and a telecoms provider, which is a fund to invest in sustainable transport. So those things are sort of increasing. I think this accelerator is a bit of a bubble potentially. There may be too many accelerators out there, and perhaps there needs to be a bit of rationalization of those. The corporate venturing, corporates tend to leap into ventures. There's been waves over the years, and they tend to leap in towards the end of a cycle. So we may be, seeing the top of a wave coming. I'm not sure. And then emerging markets are doing a lot more. They've recognized the need for innovation, and so I think the likes of Brazil that I mentioned before, and Singapore, and Hong Kong, and others. I think they will see the continued rise of those, and it'll be a challenge to. I think it'd be challenging at Silicon Valley because, you know, if I was a young person, would I want to live in Santa Clara or would I rather live in San Francisco or Berlin or London or Hong Kong or Shanghai? I don't know. You tell me. All of those, yeah. Yeah, I've met a few people here who've actually lived in probably all of those. So. I'll hand over. We've got a conference in California then in January. It'd be lovely to see you there. We'll have about 350 people. So thank you very much.